All right, let's talk about something really exciting: angel investing. In this explainer, we're going to break down how you can get in on the ground floor of the next wave of tech startups. And trust me, it's about way more than just the money. It's really about being part of the journey, helping to build what's next. So let's dive right in. I mean, who hasn't had this thought, right? The idea of finding that one tiny visionary company and actually helping it become the next big thing. It's so compelling. It's like the ultimate modern day adventure. And today, we're going to hand you the map to get started. Okay, so here's our game plan for today. It's pretty straightforward. First, we'll answer what even is an angel investor. Then we'll get into the good stuff, why you'd want to become one. After that, we'll cover the playbook, how it all works. We'll talk about your personal journey, what you need to do. And finally, we'll look at a really cool shortcut: AngelList syndicates. All right, let's kick things off with the absolute basics. What does it actually mean to be an angel investor? You hear the term thrown around all the time, but there's more to it than you might think. So here's the core of it. An angel investor isn't just a walking wallet. They do two really critical things. First, they provide the financial backing, and that's their own money, not a fund's. But second, and this is just as important, they bring mentorship to the table. We're talking expertise, a network of contacts, and real-world guidance to help these founders steer the ship through what are, let's be honest, some seriously choppy waters. Okay, so we know what an angel is. The next big question is, why would you want to be one? And the reasons are actually pretty cool and probably not just what you're thinking. Yeah, look, the potential for a huge financial win is obviously a big part of the appeal, but it goes so much deeper than that. You're getting this incredible personal satisfaction from helping build the future. You get a front row seat to the most cutting-edge tech before anyone else. And you're constantly learning, which keeps you sharp. It's this perfect blend of a smart financial move and something that's just personally fulfilling.
And let's just zoom in on the money part for a second, because these numbers are wild. Now, let's be super clear. This is the exception, not the rule. But a home run, a really successful investment, can bring back 50, 100, or even more times what you put in. I mean, that's life-changing money. You just don't find that kind of upside anywhere else.
Okay, so the why is pretty compelling, right? But what about the how? How does this all actually work? It's not as simple as just writing a check and hoping for the best. Nope, there's a process, a playbook really, that the smart investors all follow. And here's what that playbook looks like, broken down into 5 steps. It all starts with sourcing. That's just finding companies to invest in. Then comes the really hard part, diligence. That's your homework, vetting everything. If it all looks good, you move on to negotiating the deal. And then, and this is key, it's not over. You're now supporting the team and managing your overall portfolio. It's an active, ongoing thing. All right, let's pivot for a second. We've talked about the deal process, but now let's talk about you. Because before you can even think about investing in other people, you gotta get your own house in order. So what's your personal journey look like? What do you need to do? Think of this as your personal checklist. First things first, assess your finances. You absolutely have to have disposable income for this. Then you need to develop a thesis. That's just a fancy way of saying decide what you want to focus on. What industries, what tech. From there, it's all about educating yourself, building your network of contacts, and critically, having a risk management plan from day one. And that risk management plan, it starts right here. This is rule number 1. Because this is so high risk, you have to go in with a mindset that you could lose every single penny. So a really solid rule of thumb from the pros is to never, ever allocate more than 5% of your net worth to angel investing, period. But here's the good news. You don't have to be a millionaire to get started. Your first check doesn't have to be huge. A lot of new angels get their feet wet with investments under $10,000. That makes it way more accessible, right? And starting smaller also lets you spread your bets around. Which brings us to our next crucial point. This right here might be the single most important strategy. You have to diversify. The hard truth is most startups will fail. That's just how it is. So you can't put all your eggs in 1 or 2 baskets. The real goal is to build a portfolio. We're talking 30 to 50 different investments over a few years. Why? Because that's how you give yourself the best shot at finding that one monster winner. that pays for all the losers and then some. Okay, I know what you're thinking. 30 to 50 investments? That sounds like a full-time job. And you're not wrong. It's a ton of work. But there's a shortcut, a fast track to get you started. And that's where syndicates come in. So let's look at the two main ways to do this. You can go direct, which means you're doing everything yourself, finding the deals, the paperwork, all of it. Or you can join a syndicate. With a syndicate, you're basically riding shotgun with an experienced investor who's already done all the heavy lifting. They find the deal, they do the diligence, and you can jump in with a much smaller amount, sometimes just $1,000. It's an incredible way to learn while doing. So, look, as we start to land the plane here, I just want to come back to this one central idea. Yes, this world is incredibly exciting, and yes, the potential rewards are massive. But please, don't forget that the risks are just as real. To succeed, you have to be disciplined, you have to be committed to always learning, and you need to be serious about managing your risk. So, there you have it. We've laid out the map for you, what it is, why it's worth it, how it works, and your first steps. The chance to help fund the future? It's right there. It's more accessible than it has ever been before. So I guess the only question left to ask is, you've seen the map. Are you ready for the journey?